Happy Monday, everybody. I hope you had a great weekend. Today is August 22nd, 2022, and this is your Monday Market Update video. As always, let's wrap up last week and preview what we'll see this week. Stocks opened a bit on the ropes on Monday following what was a quiet weekend for news with some disappointing reports from China. Retail sales and industrial production both came in below estimates, even so much so that the PBOC cut rates. Okay, only by 10 basis points, but they did cut. And now in our world, it's not so much about the absolute, right? It's the incremental. Okay, it's a double standard. Regardless, the U.S. eco data was actually downright ugly. Empire State Manufacturing Index fell by a plunge that is not seen since early COVID. All of that, and the market still stabilized within minutes and of the open, and the rose-colored glasses were pulled out. Markets moved back up and then sideways as it waited for retail earnings to come in after the bell. Dow and S&P and the Nasdaq all up about 0.5%. The market also looked set up to look for growth to be not as bad as this report. Thursday's Philly Fed Index was set up to be an important report to watch to either reinforce this idea or refute the idea. Stocks hit a speed bump on Tuesday morning in early trading. Monday's gains were digested as overseas eco data was disappointing. Wait a minute. Bad news is good news, or bad news is really bad news? Is this confusing you? Well, Who's on First is next week's special video, so we'll see how that goes. In the U.S., eco data was strong, and Walmart and Home Depot both reported better than expected. As the market opened, we can sprinkle in some of the return of the meme stocks, and the market melted back up into the late afternoon. S&P was up slightly, Dow up just about 0.75%, the Nasdaq was down slightly. Wednesday was supposed to be a wait-and-see day for the Fed minutes. S&P gapped down at the open. The market then drifted lower with no real conviction. Yes, wait and see. That's where we got. Goldman lowered Chinese growth estimates, something we'll see and hear a lot more about soon. Out came the rose-colored glasses as the minutes were released. Of course, they were seen as less hawkish than feared. There's that term again. The minutes and their interpretation sent stocks on a run towards Tuesday's highs. That run faded as the market closed near the middle of the range. S&P down about 0.75%, Dow down 0.5%, and the Nasdaq down 1.25%. Thursday, stocks opened little change as positive tech earnings were offset by high EU inflation numbers. Better than feared eco numbers in the U.S. and jobless claims fell a bit. Rose-colored glasses won out, and the focus was on good earnings from Techland. Lunch hour brought some selling. No news to account for it, so no follow-through. Fed heads checked in later in the afternoon, but nothing new. Still intent on getting inflation under control, but as we know, the market's not listening to that. Afternoon rally was met with some late profit-taking, so that the win was a small one for the bulls. The S&P was up about 0.25%. The Dow was up ever so slightly, and the Nasdaq was up less than 0.25%. Closed out the week with a day in the red. Rose-colored glasses fogged up. By the end of the day, on Friday, the S&P was down a bit over 1.25%. The Dow was down about 1%, and the Nasdaq was down just over 2% on the day. All three were down on the week. First down week in 4 weeks. Overall, the market just doubted what they had been thinking for the last 15+% move from the bottom, or at least the last little bit. As you've heard me talk about rose-colored glasses, Friday, most of the read on the eco news was that news was pretty good, and that it is not so good that when the Fed is trying, and that is not so good when the Fed is trying to slow inflation and really reverse it. As we've discussed, we're still near 40-year highs in inflation, and the Fed needs that to turn around and get near 2% from near 10%. We have a ways to go on that, and the Fed heads keep telling us that. This coming week, though, we do not have a Fed meeting. We do have the Jackson Hole retreat meeting, and that will be the lead story. Quick preview of the week. We'll get some manufacturing numbers and some home sales. Not so much new expected stuff for that. Fed heads, Kashkari, the non-voting member, he will speak early in the week, and then Powell will speak from Jackson Hole on Friday. Throw in some Q2 GDP numbers, jobless claims, and then on Friday, in addition to the Powell speech, which will need to address these strong numbers we've had in the economy, we'll also get the PCE price index. Remember, that's one of the key inflation reports. Also, the University of Michigan consumer sentiment and the inflation expectations. All of a sudden, this is a closely watched index. We'll just have to see how it goes. So overall, there is a pretty busy week ahead of us, at least later in the week. Friday has shown us that we'll see that what today will bring, but overall, the September-October time is often pretty volatile. Watch for earnings revisions to come at fast and furious. Earnings have come fast and furious last week from retail. Most of the S&P has already reported, and they've been good. Overall, through the 12th of this month, 460 out of 500 companies reported, 14% revenue growth, 6.4% earnings growth, 71% beat on revenue, 75% beat on earnings. Please note the S&P 500 earnings will be down year over year if we excluded energy. not in the S&P, but just to give you an idea, Aramco, the Saudi oil giant, earnings up 90% year over year. Still such a good earnings season? We don't know, but remember, percentages don't always tell the full story. Just another quick note, we are watching inflation, right? Or that is what we should be watching. The market keeps trying to price in a Fed pivot, and that Fed heads have spent the last few years trying not to surprise us. They keep telling us that they're in attack mode on this inflation, but we don't listen. Overall, inflation is running over 8.5% year over year. That is more than 4 times the Fed's target. Bullard and other Fed heads keep telling us that 4.25 is the target by year end, and we are, can you guess? Yes, 2.25, 2.5. I'm not sure that a Fed pivot by year end is in the cards. Let's see what these last few weeks of the summer bring. If anyone's still on any of the trading floors, for now, stay in touch. Let's keep talking about the plans for the coming months and the years. Let's focus on the goals. Friday will be another planning video. Keep an eye out for that. Have a great week.